All right, so we got one trade to talk about today, and that is Euro JPY. So let's break it down. Let's get into it. So Euro JPY, this was a long play. A long play meaning that I bought it. I did not short it. I went long on it. So Euro JPY, what are we looking at right here on the daily chart? So can you tell me, answer to yourself, is this bullish or is this bearish? Is this daily chart at the moment? Is it bullish or is it bearish? It's bullish, right? So we're operating within a bullish market structure. Okay, you see right here, boom, we broke this high. See on this leg up right here how we broke that swing high level, shifted market structure. And then we traded up higher, and then we had a little pullback. So it's not 100% confirmed market structure to the upside. We've had that shift and we are bullish. Trend is clearly bullish. But if you wanted 100% confirmation, you would have to wait for that swing level to put in, which is 3 candles, remember. But what did I see on the lower time frames that really made me like this play? So we didn't have anything real interesting on the 4-hour chart. The 4-hour chart, we had this leg up right here. See that? We had that leg up, cleaned out some buy side liquidity, and then we had this little pullback which rebalanced this first portion, or this first fair value gap. But there's really nothing interesting on the 4-hour chart as well. The levels, our points of interest on this thing, it was on the 1-hour. So once you go to the 1-hour chart, and I'm going to refer back to my free Discord chat real quick. I posted these levels in there. As you can see, the link to that is in the video description. It's a 100% free Discord chat room where I post my charts every single day that the market is open. I'll post my charts in here every single day. Okay. And I have an entire section with educational material that you can study as well if you're interested. The Euro JPY said bias is bullish, owed high inside of the fair value gap, also bullish order block. We do have a nice bullish order block on the daily chart a little bit farther down, but likely will be later when it trades down into that level. The level that I was referring to when I said a daily bullish order block is right here. See that? That's what I was talking about. Also an 80 level, okay? So what do I mean when I say 80 level? Remember, we have key institutional price levels being 0, 0, 20, 50, 80, okay? So you see how we had that 80 level right there? If you look at my cursor, look where it's moving, 80 level, boom. Right down there with our key levels of support. So 80 level is a level of support as well, okay? That was the chart that I posted in chat this morning. See, I indicated that I think it's going to trade down lower into those levels of support and then rocket off of them. And that is exactly what happened this morning. So here are our levels. That was the old high I was referring to. See that high inside of our fair value gap. Refer back to my series on support and resistance. If you watched it, if you studied it, you know what that means. That means that when we have an old high like that inside of a fair value gap, many times it's a very sensitive price point. So we had that. Some would just consider that the bullish order block, but for order blocks, I prefer to use the body now. I prefer to use the body because they're way more respected. The bodies of the order blocks are way more respected usually than the wicks of the order block, because that's where the bulk of the volume is traded in the body. But that's why it's respected more. Okay, so those were our points of interest. Okay, those were our key levels of support, right? And so, yeah, what happened this morning? You can see this is where price opened up at. Here's 0 midnight. We had a little move lower, and then boom, we get a really nice move to the upside. A lot of conviction, a lot of strength. And London session was 100% confirmed bullish because this move happened during the London session. London session was bullish. A bullish trend was set during London. And when this happens, it's a night and day difference, as I've said many times. Whenever you have the influence of London backing you, because remember, our bias is bullish. We're looking for buys, and London session is bullish. When you have that scenario playing out, it's much higher probability than, say, if you have like a bearish London session, for example. It's always best if you have that momentum. You're basically just piggybacking that momentum off of London session down into and then you're waiting for that pullback. That's key. We don't want to grab something that's tripping up higher. I'm not saying you can't do so profitably, but why? Why buy something in a premium market when you could get it at a discount? Why buy something at a premium when you can get it at a discount? Okay, so that brings me to my next point. How do we know when it entered a discount? Because we always want to be buying it at a discount. We don't want to buy in premium market. Well, we take our dealing range. What's our dealing range? Our dealing range is this low, which is low of day that was set during the London session, to the high of that price swing prior to New York kill zone, prior to that pullback in New York kill zone. So right here, we're going to take that price range. That's our price range. See that? That leg to that leg, it pulled back, and here's that 50. If you look at my cursor, look closely, there's 50% equilibrium. Did we tap below 50% equilibrium? We sure did on this move right here. We came down and boom, we tapped below 50%, right? Now, I didn't get FOMO. I didn't get FOMO on this little pop-up right here. Some people, they would see this little pop, they would see it come down to the level, and then they'd see it curling up, because it did. It looked like it was going to go. On this first move off that level, it was curling up right here, coming up into this. It looked like it was going to go, and guess what happened? You know what a lot of people probably did? They FOMO'd into it. They FOMO'd into it because they thought that it was going to go. They didn't follow their plan, or that's if they're trading this particular style. They didn't follow their plan. They didn't wait for a pre or a discount marketplace. They jumped in, FOMO'd in, and it whips lower and ends up giving the discount anyway. Now, sometimes it'll still rip without you. That happens, but it's always best to wait for a discount, because it gave us that discount on this move down right here. It came down into a discount, and it tested both of our key levels of support, completely rebalanced that portion of price action. So our old high right there, and then the body of the order block, where this is all one order block. Remember, all of this is one order block. It came down and tested it. Tested our 80 institutional price level, and boom, we just blast off. Just a beautiful, beautiful move on this. Low of day was my stop, high of day PT. Just a beautiful play. And our draw on liquidity, if you refer to the daily chart, you would have been more aggressive. If you wanted to be more aggressive, you could have held out for this level right here. See this? That was our draw on liquidity. That daily swing high level that I figured was going to get tagged, which it did. I mean, just beautiful play. Just absolutely phenomenal play on that. But one last time, if you want to join the free Discord chat, the link to that is in the video description. 100% free. There's no catch. You just click it, you join, you're in, and you can start learning with us, start connecting with us, sharing your thoughts with us. That's what it's all about. So if you enjoyed the video, leave a like, subscribe to the channel. I'll catch you later.